Yo, what's going on, guys? This is Golden Trades. My name is Tanner. I'm going to be breaking down a trade that I took this morning on NQ. I am taking micros, so that's why my contracts are MNQZ 2025. I did take 8 micros here just to prove that I did take this trade. I'll also show you that I did make around $650 this morning with a brand new Apex account. But yeah, let's go ahead and hop right into it. So on the 4 hour, we've been very bullish for a very long time now, and this range right here, this 4 hour range, we still haven't reached 50% of that level, but because of the swing low on the 1 hour, we had created a range of itself to where we did notice that there would be an opportunity for us to go into discount, which I was looking for. Plus, on the 4 hour time frame, we have this 4 hour fair value gap that we tapped into. Also, when it comes to changing the state, we did close above the 4 hour change in state. So I was initially looking for higher prices because I think we're either going to continue generating liquidity or we're going to go take out this high again, and be at all-time highs. So knowing that, on the 4 hour, I dropped down to the 1 hour, and we're in this accumulation phase. I trade the forever model that Justin Werline created. I'm not the one that had created the forever model, but it's something that's worked for me, so why change it? Why change something that works best for me and has continued to make me money, or continue to get payouts from prop firm accounts? So it's something that I like using. I like having a lot of confluences that tell me exactly, like which direction we're going. And I like to use the higher time frames because higher time frames are going to help me whenever I'm dropping down to a 1 minute time frame to execute those snipers. So not really much happening here on the 1 hour, but we are in an accumulation phase, and I'm looking for that manipulation to take out this low and drop into the 50% hourly range and into the 4 hour fair value gap. So then I drop down to a 15-minute. I notice we have all this generated buy side liquidity. This is also the Asian range, and we are below that, along with the midnight opening price being up here. So anytime that we're below midnight, below the Asian range, I want to see us take out Asia highs. So this is just confirming to me that, okay, we still want to be bullish. But the thing that scared me was this little guy right here, this up close candle, which I believe on ES that we had taken out this high, which would have been an SMT to drop down, break through these fair value gaps here, and then if we were to close below this up close candle here, this would have been a change in the state, which means that we would have possibly gone lower, which is not really something that I wanted to see. But we indeed, this was what time? Around 9:30, after 9:30, or when 9:30 happened, we had closed above this up close candle, which just shows that we just took out all this sell side liquidity for us to go higher. Because if we're going to go higher, we need to go lower first. So that was a good sign for me, which I love to see. Then I dropped down to a 1 minute time frame, and this is when it all starts to make a little bit more sense. It's a little bit clearer, so I'll just remove that. I need to figure out how to get rid of this annoying replay, but I'm not gonna lie, I was a little bit too zoomed in here. It's also a little bit early on in the trade for me to even think about taking a position around here, but this is more of like an A setup, not an A plus setup, because we don't really have a fair value gap here. Because even though we did take sell side and we are 50% of the range, we have an SMT. We did close above this with this candle here for a 1 minute change in the state. It still it didn't look pretty. It didn't look right. So I didn't take a trade here, and we did end up going higher. And then as we went higher, we did go lower, and created this 1 minute fair value gap here. we took the internal liquidity on this on this sweep here. So whenever that had happened, I was like, okay, good. We have a SMT. We have we're in discount. We took sell side. Looks like on the 15-minute that all we did was take out sell side liquidity. We are generating liquidity. We have low resistance liquidity. We're below the midnight range and Asian and below Asian range. So I really want to at least try to take this high out, right? And I don't need this huge move up here, right? I don't even want to go all the way up here to all-time highs. I just want a little bit right here. I just want a little bit of the pie. So when that happened, I was just waiting for this to close above the inversion fair value gap. So we're here, and honestly, I took the trade right here. I wasn't patient, and that's something I need to work on. But as we click through it, we do close above the fair value gap here. We don't necessarily close above the change in the state, but the next minute we do right here. And this honestly would have been the best trade. This would have been the best opportunity for you to take a trade. Because, as you can see, we just take out those highs here and would have banked. So, that's pretty much the entire trade that I took. It literally only took maybe 1, 2, 3, 4, 5, 6, 7 minutes for me to make $650. So I'm pretty happy with it. Really can't complain. Thing I'll take away from it is I got to make sure that I'm a bit more patient. Other than that, I hope you guys found this insightful. Maybe that you learned something. If you did, please leave a comment down below. I'm trying to work better on explaining how all this works. I'm pretty new to the YouTube game, so please be patient with me. You know, it's not really easy for me to just talk into a camera right now. It feels like I'm talking to myself. I'm not used to that. But I hope you found this also entertaining. If you like this video, please leave a like and subscribe. But I'll see you in the next video. Peace.